Good afternoon. Thank you all so much for being with us today for the Pathways to Progress, Understanding Economic Mobility in the Mississippi Delta. We truly grateful to have you here and as we explore such an important issue for our region. First, I would like to extend a heartfelt thanks to the generous sponsor, WK Kellogg Foundation. Your support makes meaningful conversation like this possible, and we are truly grateful for your commitment to creating pathways to equity and opportunity across the Delta. At the Foundation for the Mid-South, our belief is simple but powerful. Everyone, no matter your zip code, race, or background, deserves a fair shot at opportunity. For us, advancing economic mobility isn't just part of our strategy. It is a deserved fair, is a deeply personal and moral responsibility. It is about being it's about ensuring that families not only have a chance to improve their financial well-being during their lifetime, but they can also create a better path for generations that follow. We're thrilled to have Jamia Alexander moderating today's conversation. Jamia is a proud recent graduate of Jackson State University, where she earned her Bachelor of Science in Journalism and Media Studies. As a new mom and a skilled media professional with years of experience in media relations, she brings a heartfelt insight and perspective to this dialogue. Her passion for storytelling, commitment to community engagement, and dedication to uplifting underserved communities make her the perfect guide for today's discussion. Jamia, I welcome you. Good
Thank you
afternoon.
so much, Casio, for that warm welcome. Good afternoon, you guys. Hey, how you guys are doing? We will be diving into a very powerful and necessary discussion and conversation that we need to have in today's economical community, especially in the Mississippi Delta. And that conversation, as I said, it includes the mobility in the Mississippi Delta, the economical barriers and things of that nature. And we'll talk about what keeps us at a standstill and how can we press forward and move together in that area. So coming to the stage, we will have some leaders who are leaders, and I would like to say researchers who are very skilled in the area. So you will receive the insight and the numbers and the data and the boots on the ground work that these guys do. So first up, we would like to welcome Mr. Norman Jones. Norman, he's a community development advisor at the Federal Reserve Bank of St. Louis. He's walking us through a presentation titled Benchmarks and Barriers, which is the mobility in the Delta. He'll help us understand how mobility in the region stacks up against the state and national trends and what it means for the people who live here. Mr. Jones, thank you. Welcome to the stage and thank you for joining us. You may present whenever you're ready.
Well, thank you so much, Jamia. And thanks again to the Foundation for the Mid-South for having us, having myself. We're really excited to share more of the work that we have, the research that we compile, and insights from the engagement that we do across the Mississippi Delta and our district at the Federal Reserve Bank of St. Louis. And so we're going to get right into it and share at least a high-level overview of economic mobility. And I do want to start with this preface that the views expressed here are those of myself as the presenter and do not necessarily represent the views of the Federal Reserve Bank of St. Louis, other reserve banks, or the Federal Reserve System. To kind of introduce that to you, let me give a brief overview of the work that we do as the Federal Reserve. We cover the entire United States through 12 reserve banks. We are in the 8th District as part of the St. Louis Federal Reserve, so you'll see that blue portion right in the Midwest along the Mississippi River. We have 3 branches, one based in Louisville, Little Rock, and myself here in the Memphis branch, where I cover West Tennessee, the northern half of Mississippi that we share with the Atlanta Bank, and I cover a sliver of East Arkansas, so the Arkansas Delta. Our job is to coordinate together as a system to fulfill our mission, which I'd be happy to share with you in our coverage. You'll see a closer map on the next slide. That we want to advance a strong, stable, and inclusive economy. And so our community development function is here to promote that resilience for low to moderate income communities based in our congressional obligation to not only regulate the economy, but make sure that low to moderate income communities are positioned for economic development through the resources we can provide and the partnerships that we can broker as a neutral convener. So let's jump right into today's topic, economic mobility. In understanding economic mobility, I think the best way we can frame this is that it's the ability of one person or their household to move up the economic ladder. What that means is, what is your potential to move between economic brackets? And we can understand that through a number of factors, whether that's education, healthcare, housing, or transportation. There are several indicators that we use to understand one's ability to economically progress. We're going to talk today not about all of these, but some in specific in my portion as we lay out this definition in understanding workforce development, small business, and banking access in the Delta. I want to point to this map here that you see on your right. This is a map from the Opportunity Atlas demonstrating economic mobility across our entire country at a census tract level. And so this map will show you the red, darker areas are household incomes that are lower for children once they turn 85. And so let me explain that briefly. That as a child, this map is meant to demonstrate that as a child, your propensity for the income that you might receive on average at age 35. Here you'll see in that white circle, I've taken time to highlight and just point your eye to the Mississippi Delta that we're talking about today. It's part of this southeastern region where we see lower income outcomes. And so we're going to talk a little bit more about what does that look like in the measures that we have as the Federal Reserve System that we also hear from our partners around the region. And so let's jump right into the first topic, workforce. We do both quantitative and qualitative research as part of our community development function. And in understanding workforce as a part of one's economic mobility, we conducted 16 different focus groups across our 8th district, those 7 states that you saw earlier. Each of those groups shared their concerns about structural hurdles that get in the way of that economic mobility and workforce opportunity for individuals in their communities. Jobs are important parts of economic mobility because your ability to earn an income that positions you for saving, for hopefully wealth, for other opportunities is a vital part of that mobility. We heard a lot of interesting findings in these roundtables, but some of the distinct ones that came out were around young adults. The effects that I'll share on the next slide are magnified for these folks. So whether it's childcare, housing, education, or mental health, these are all findings we heard directly from stakeholders in the Mississippi Delta in our conversation. And we followed up with them both last year and this year to examine the root causes of these hurdles. But we found across the board, all of these are magnified for disconnected youth, which are defined as young people from the ages of 18 to 24, or 16 to 24, who are not in college, but also aren't working. So where do we find these folks in our economy? What does that mean for our greater output as a community, but also for them and their economic mobility individually? Here are some numbers to demonstrate to you where we see disconnected youth disproportionately. And while we weren't able to disaggregate that for the Delta and specifics, we do know that across the country, about 16% of youth as of 2023, 2024 were disconnected. Again, out of school, out of work. In Mississippi, that's amplified to 17%. But when we focus in on rural communities, that includes the Delta, that number is getting closer and closer to 20%, meaning that more or close to 1 in 5 young adults, young people, aren't in school, aren't working. And we want to translate that not just to economic output, but their lived experience and ability to handle and mitigate economic shocks. So let's unpack that a little bit more and understand some of these factors for this profile. You'll see that orange box that looks like it might have slid up just a little bit, but we're talking about low to moderate income young adults, right? So we see that effect disproportionately grow for disconnection when those young people are earning under $35,000 a year in their household. So they may still be living at home with a parent or with other relatives or dependents. Again, you'll see that number spike up across the board, but it's even higher in rural Mississippi with 40%. That's nearly 1 in 2 young adults who are disconnected and low income. We'll also look at that from an education standpoint. Remember, we talked about education as a marker for economic mobility. What is your ability to get a degree to position yourself for a job and for other opportunities that allow you to excel or exceed the lot in life, so to speak, that you may be dealing with? Those numbers are disproportionately higher, again, in rural Mississippi, with 1 in 3 young adults being disconnected without work, without education if they don't have prior education as well. So they might not be in school, but again, you see those numbers higher. And then we're going to look at some other socioeconomic factors, things that impact your lived experience. So you might say, well, how can I get a job? How can I get in school if I have other constraints on my time and my resources? Whether it's physical disability, mental disability, or otherwise, we see that number dramatically higher, both for the country and the state. But again, more than 1 in 2, 60%, the majority of disconnected youth, a majority of disabled youth are disconnected in rural Mississippi. And the same is the case, or close to the case, for those who have children. So there's a number of causes that can continue to impact that economic mobility, particularly for rural Mississippians, as we see in the Delta. I do want to point, before we move to the next slide, that as we move through this presentation today, particularly that you see in the corner, that's a QR code to a longer report that we conducted based on these findings. And you're more than welcome to take out your phone or mobile device to scan that information. I encourage you to read more and understand, how do we start to engage the next generation of our workforce when we talk about an economically mobile future for our low and moderate income communities. But workforce is not the only component to economic mobility. What does it look like for you to have access to a bank, to manage your finances, to position yourself for wealth and financial well-being? Let's take a look at the next slide as we dive into that. Here, I wanted to point out some data that we have on small business credit access through our small business credit survey. I want to point out notes to you that this survey is something we conduct annually across the entire country out of our Cleveland Bank. The Cleveland Bank makes sure that we distribute this survey. We get responses from every state. And unfortunately, we didn't get enough to disaggregate results from Mississippi this year. And this is my plug for you all to hopefully reach out, engage with me. I'd love to make sure that we get those. But we can still make some conclusions about small business more broadly in our 8th district. When it comes to the primary source of financial resources, that pie chart on your left, it looks like the data labels aren't there. And again, reach out to me. I'm happy to share this information with you. But 47% of small businesses that responded to the survey last year, over 1,000 or close to 2,000 small businesses reported their information. 47% access their finances and get their capital from small banks, which makes sense for a small business, right? You build that relationship. But then we also see 37% getting that financial support from large banks. So most folks are going to financial institutions to make sure that they can supply their business. And one's ability to be an entrepreneur is tied to their economic mobility to create a financial future for themselves and others. The challenges that they might face with those small banks are demonstrated in that graph below. We see a number of different things, right? Could be a lack of transparency, difficulty applying, and just unfavorable loan periods to repay. But the largest thing that we see here is that over 60% of respondents had no challenges with small banks. And so while we see disproportionate effects for economic mobility in the Delta, we also see some really powerful successes. Those localized relationships, particularly in rural communities, can point us to a key to success for economic mobility as we look to move forward in the Delta. Let's also look at that on the consumer level on the next slide, when we leverage a tool from our Philadelphia Fed called the Banking Deserts Dashboard. Again, you're more than welcome to look this up just as it's listed. But we found that 11% of census tracts last year were current or potential banking deserts, meaning that between a radius of 2 to 10 miles, depending on the metropolitan status of the locality, there is not a physical bank present. I've again circled the Delta for you roughly. I know that the Delta is amorphous for all kinds of folks. But here you see most of those counties are concentrated in the Delta. The red are banking deserts and potential ones are the blue, meaning that that one bank that's there in the blue counties and census tracts, if that bank closes, there will not be accessible financial resources in the form of a bank or financial institution for those consumers. So how do we mitigate these challenges, especially when we've just learned that small banks are vital to the success of communities? We know that small businesses are vital to one's economic mobility, and both of these things together allow people to make action out of their workforce potential and their education. So all of these come together to paint a mosaic for economic mobility that we're going to dive into today. And how do you take action into that space? What do those translate to for lived experiences? So wanted to lay that out for all of you. We have plenty more research. That's one thing that we specialize in. And I myself, along with my team of advisors, make sure that we're out in communities every day. So even the smallest towns you could think of, I'll be there. Please reach out because we want to continue these conversations and make them actionable for you. There are 2 more QR codes to touch on some of that disconnected youth information and more about the healthcare side and the care economy when it comes to economic mobility. So you can learn more about childcare costs that get in the way of one's ability to work or take care of their family. And then also healthcare, mental health. When we talk about that disconnected young adult rate, we understand that mental health is a component. And so we actually have more research and insight on and reporting rather on that as well. So a litany of resources, wanted to lay that out for us today. And I really look forward to the conversation as we dive deep into options to understand how economic mobility translates for residents, citizens, and families in the Delta.
All right. Wow. Thank you so much, Mr. Jones, for all of that information. And I hope that we have some nonprofit organizations or workforce development groups here today, because those numbers have literally given all the insight that we need, especially for the Mississippi Delta. So again, thank you, Mr. Norman Jones. And next up, we'll just keep things rolling. We have Mr. Kiydah Burt. Kiydah comes from Hope Credit Union. An institution that is being y'all, I am so sorry. An institution that's been doing the work for decades when it comes to uplifting Black communities through financial access and empowerment. Today, Mr. Burt will talk to us about how Hope is working to close the racial wealth gap and create opportunities for entrepreneurship and financial inclusion across the South. Mr. Burt, the floor is yours. And I think that you really Mr. Norman just laid it out for you to go on and do your thing. So
He
you can take
did.
it away.
He did. Thank you so much. And good afternoon,
You're
everyone. My
welcome.
name, again, is Kiydah Burt. I'm the director of the Hope Policy Institute, which is the policy and advocacy arm of Hope. Collectively, Hope is a community-centered credit union, nonprofit loan fund, and an advocacy organization, which I am the director. Our mission overall is to increase financial inclusion for historically marginalized populations throughout the Deep South states of Alabama, Arkansas, Louisiana, Mississippi, and Tennessee. Now, throughout several economic crises and natural disasters such as Hurricane Katrina, the Great Recession, COVID-19, and current economic conditions, we work with community leaders to forge policies and practices that address conditions that actually limit the opportunity for low-resource communities. But I want to kind of situate and focus our work with a slide. So to anchor this work, we must first understand the historical context of our footprint. And remember, our footprint is the Deep South. So here I'm sharing with you a map that was published on the eve of the Civil War, okay, 1860. This map is from the Library of Congress, and it illustrates concentrations of slave populations throughout the southeastern United States. Now, if you start in Arkansas and Louisiana, and you walk through the Mississippi Delta, on through the Black Belt of Alabama, and through rural Georgia, and up until the eastern, southeastern region of the Carolinas, you'll see that the highest concentrations of enslaved Africans and indigenous people was actually along the Mississippi River and the Alabama Black Belt, right? We understand that in this region was most fertile with soil, cotton, catfish, tobacco, things of that nature. But it's important to start this conversation around economic mobility and wealth generation for this community, because for communities who are yet to be freed, this was their starting point when it comes down to mobility and wealth generation. Now, I want you all to compare that map to this map of deep entrenched poverty, okay? The center map is going to show you counties that have been in poverty by decades, right? And then counties that are dark blue have been in poverty for at least 4 decades or 40 years. The deepest, darkest blue are counties that have been in poverty for 5 decades or 50 years. And what you'll notice, or rather what you'll see, is an uncanny resemblance between high concentrations of slave populations or enslaved Africans and indigenous people with counties that have the deepest, highest rates of poverty. Again, 4 or 5 decades. Now, what's interesting about these correlations, if you will? Well, these deeply impoverished communities and counties are more likely to be Black. They're more likely to experience high rates of unemployment, high cost mortgages, low performing schools, and they're also more likely to exhibit lower health outcomes and lower rates of access to banking services. And you'll see all of those different correlations as evidenced by the surrounding inset maps. Now, those counties that are outlined in green were counties that have been in poverty for 30 years, and in the shaded areas were the areas of interest. But these correlations and intersections are what make the Deep South unique. Matter of fact, it's what represents the Deep South actually represents the intersection of race, place, and policy, where the consequences of policies from the past have long-standing impacts on the conditions of the communities present and future. But for Hope, this is where our work is rooted. In fact, this is where we find our impact, understanding that these policies have created and sustained these challenges, and then by policies will we find solutions. So we understand our work in the context of slavery, deep poverty in the Deep South. So we work to provide financial inclusion by addressing three categories of wealth building. The first is going to be access to affordable financial products and services. The second is going to be access to small business capital. And the third is going to be access to affordable housing and homeownership. I'll start with homeownership. So we, again, as a credit union, offer in-house mortgage product that is designed to address systemic obstacles or challenges for potential home buyers who typically may lack a down payment. So our in-house mortgage product is manually underwritten. It accepts non-traditional forms of repayment. So that's a utility bill, a phone bill, rent payments. We accept deferred student loan debt. So instead of taking all of your student loan debt and calculating your debt to income ratio, when it's in a deferred state position, we'll take a percentage of that total loan debt and calculate your DTI. We do not require mortgage insurance, private mortgage insurance. We also will accept credit scores. So potential borrowers who have a credit score as low as 580. Okay, you have a credit score as low as 580 and get a mortgage for Hope. And also of critical importance is this in-house mortgage product is 100% loan to value. What does that mean? That means you don't have to have a down payment. You don't have to have 10%, 20%, 30%. If you qualify for our in-house mortgage product, you do not have to have a down payment. Okay. Now, all of these factors, these characteristics of this loan product are to overcome the systemic challenges many first-time homebuyers of color and many first-time homebuyers in rural, deeply impoverished communities face when trying to own a piece of the American dream and trying to get a part of a process to generate wealth. Now, pictured here is a house that was purchased by Rakisha Hale of Alabama, Chickasaw, Alabama. And her experience with Hope and our mortgage product really exemplifies or illustrates the impact of home ownership and access to a mortgage product that's designed for your needs. So she was a remote worker, dreamt of owning her own home to raise her family. However, she didn't have enough space and time to do both, to work at home and also grow and raise her family. Now, she reached out to her bank of 15 years to acquire a mortgage and purchase this home, but they turned her down. They were of no help. So she turned to Hope. We approved her mortgage and provided her $5,000 in grant funds to assist with closing costs. So she became a first-time home buyer in 2024, just last year. And I love the way she explains it. She states, having a home means having more space. And if I can separate my work and personal life, that allows me to devote more time to family. So that's the impact of home ownership, but it's also the impact of having access to a product that's going to get you into a wealth generating process to get you to the American dream or the dream that you desire. But look, there are other drivers of wealth that I've already mentioned that I want to quickly talk about before I'm over time. The first is going to be access to banking and affordable financial services and products, and the other is going to be access to small business capital. Now, small businesses are a major driver of wealth. We know this. In fact, the racial wealth gap shrinks from 6-to-1 to 3-to-1 when we compare white and black-owned businesses. However, access to small business capital is unequal. We know that there are disparities in who gets approved and who gets denied. We know from our colleagues here at the Federal Reserve that black-owned businesses are the least likely to be fully approved for small business loan applications, and they have the second highest rate of loan denials. White businesses, on the other hand, have the highest rates of full approval and the lowest rates of denial. Now, this is particularly important, the data I just shared with you, for what we call non-employer firms, which comprise nearly 3/4 of all businesses in our 5-state footprint. Now, these businesses are like nail techs, beauty salon owners, people who cut grass, barbers. These are these we call Schedule C filers or sole proprietors. These are the backbone of our local economies. And we here at Hope strive to support these local businesses. In fact, for example, in 2023, we closed 156 loans, which supported nearly 1,500 jobs, with half of those loans going to Black-owned businesses here in our region. And similar to small business access to capital, we also understand that access to banking is critical to wealth building. We know, as Norman just mentioned earlier, we're looking at Federal Reserve data. If you're a community in a banking desert, you're going to have a harder time attracting resources that you'll need to attract, to not attract, but to get access to home ownership, affordable housing, community infrastructure, or other job creating activities. Again, similar to some of the data that Norman provided, we know in our 5-state footprint that the unbanked rate of households is actually 8%, which is twice as high as the national rate, which is 4%. So just giving you an example of this is where we find our work. The Federal Reserve also finds, again, Norman mentioned the census tract data that they have for banking deserts, that 8% of our census tracts in the Deep South are effectively banking deserts, which again is twice as high as the national rate, but 5% have only one bank. Now, what does this mean for Hope? This means that nearly half of our members were previously unbanked before they came to Hope. And what does that mean for us? That means that in order for us to do our work, we must meet our communities literally where they are. So I'm going to round this quick section out about how we meet the needs of our community members, not just in products, but in place building. A third of our branches, we have 24 branches, a third of our branches are located in persistent poverty counties. And 1 out of 5 of our branches are located in towns situated in the Mississippi Delta, 3 of which have no other depository institution. So we believe in not only creating a product to meet our members where their needs are, but building and acquiring branches where our communities actually are. So I'll leave you all with this. Since inception, with this approach, community-centered, community-led, community-focused, we've generated over $3.9 billion in financing that has benefited and upwards of 2.7 million people. And our impact, as shown here on this slide, is evidence that solutions exist to increase economic mobility and household wealth. So what we must do is to continue to support such institutions by providing access for the communities most in need. I'll stop there and turn it back to Jamia. Thank you.
All right. Thank you so much, Mr. Burt. That was great insight, valuable. I hope everyone's ears were turned on because there was a lot of information, and I hope that the seed that has been planted actually gets watered and continue to grow. So for our next speaker, we'll bring up Dr. Anna Hernandez Kent. Dr. Kent is a senior researcher at the Federal Reserve Bank of St. Louis. She'll walk us through the presentation titled By the Numbers, Wealth and Workforce Barriers. We'll look at wealth gaps from a different angle, breaking down the systemic issues that often limit workforce participations and financial stabilities across the communities. Dr. Kent, thank you so much and welcome to the stage. You can take us away whenever you're ready.
Thanks, Jamia, and thanks to the Foundation for the Mid-South for having me today. So just like Norman, I'm going to start with my disclaimer, basically the same one, that these are my views and not necessarily those of the Federal Reserve. And I'm going to really focus the bulk of my time on wealth. And that's because since we're talking about economic mobility, that is really, in my eyes, the driver. And a lot of people, particularly if they don't have a lot of assets or if they have a lot of debt, they might not think of wealth as something that they can achieve. But it's still important to understand what components actually go into wealth, because wealth is power. Wealth is the ability to save, the ability to pass something down to your children. We know that wealth is intergenerational, unlike income. Income is the here and now. Wealth is, will I be able to retire in my late 60s or even early 70s? Will I be able to afford that comfortable retirement, or at least not be a burden to my children? Will my kids be able to go through college if that's what they choose, or help get started with a small business? As Kiydah was saying, that small business component is really important. And so what I have in front of you is our latest data from the end of 2024 in terms of how is wealth actually broken out. And I want to call your attention to 2 categories: the red, which is stocks essentially, and the bottom yellow one, which is housing, real estate. And those together make up about half of assets. This is for all households in the United States. And however, if we look at income, the story changes somewhat. So on this next slide, we have income from the bottom 20% to the top 20%. From left to right. And what we can see is that real estate category, that housing category, it's much more important as an asset category to lower income people. Whereas stocks are a much more important asset category for high income people. This is because the majority of stocks are owned by high income people. And this includes both directly held stocks as well as stocks that you might own through a retirement account, like a 401k. We also know that there's vast income inequality. So within each of these columns, it's going to add up to 100% because that's for that particular group. But if we look at wealth inequality overall, we know that it's quite vast, and it is has been so over time. So the top 20%, again, that bar on the right, they had on average $3.8 million in wealth. That's all of your assets, less all of your liabilities or debts. And the bottom 20%, the bottom fifth of American households had $160,000 on average. So pretty huge wealth discrepancy there. And if we go to the next slide, as Kiydah was saying, there's also, because of a history of slavery, discrimination, Jim Crow law, there is, and because wealth is intergenerational, there is a very vast black-white gap at the median for wealth. So the median would be half of families have less and half of families have more than that. And that's what you see in this figure here. So the greenish color on the bottom, those are the median black householder family. So again, half have less, half have more. And the top blue, that is the median white family. And this goes, the data goes back to 1989, all the way through the latest data, in this case is 2022. And what we see is that the gap hasn't changed, right? If anything, in dollar terms, it's gotten larger. So between a 3-year period of 2019 pre-COVID to post-COVID 2022, the gap between the median black and white family in terms of wealth actually grew by almost $50,000. So wealth gaps are continually growing because it's much easier to, for a simplistic example, double your money when you have, say, $100 than it is to double your money when you have $100,000. So percentage gains are going to be bigger in dollar terms for white families, wealthy families, et cetera, compared to lower wealth families. So wealth, again, as I said, is intergenerational. It's long-term kind of strategy for economic mobility, but how do you actually get there? Well, income and wealth, while they're different, are very strongly correlated. So a correlation for any stats people out there of roughly 0.6 or so, which is a strong correlation. It's not everything, but more income typically translates to more wealth. So how do people earn income? Well, for many people, it comes from wages. It comes from a job. And so I was really curious about what things keep people out of a job. Norman talked about our disconnected youth work. That's something I encourage you to look at. Childcare work, that's something that I've specialized and done a lot of work in. But I was also curious about people who are not currently working, say they want a job, but also haven't looked for a job in the past 4 weeks. So why is it? Why is it that they're not actively looking? Why are they somewhat discouraged? Right? And so these 3 topics are the ones that really were highlighted. First being family responsibilities. Now, this includes everything except childcare. So family responsibilities might mean taking care of an elderly relative, a parent, an uncle, an aunt, etc. It might mean taking care of a disabled family member or other family responsibilities. It's not necessarily caretaking. About 25% of people who weren't looking for a job but wanted one said it was because of this barrier. Another about 20%, 1 in 5, said it was because they couldn't find work. And again, remember, they weren't actually looking for a job. And so they might have been discouraged. They might have looked in the past and hadn't been able to find anything. And so they decided to stop looking. And then another nearly 10%, or excuse me, a little bit over 10%, said it was because of ill health or physical disability. So again, bringing in the importance of looking at health, especially as a country. because it's going to impact productivity as well, not just for an individual or a community, but overall. And I want to leave you with some trends looking more specifically at the Mississippi Delta. So the map that you have on the right here, that's going to be income, and the lighter colors are going to be lower income, the darker colors are higher income. And so you can see that along the Mississippi River, the Mississippi Delta, we have lower incomes in general. That is probably not a surprise for many of you. But Mississippi in general also ranks almost at the bottom in terms of median wealth. So it ranked 49th out of 50th for median household wealth as of the most recent data. And I also want to mention that the income map and the wealth map are very similar. So if you're interested in your particular county and what median wealth levels are for the first time, we actually have data on that, and you can see that if you just Google the Federal Reserve Bank of St. Louis household wealth in the Midwest and Southeast. You can download that data. You can play around with it. You can look at it. And we also know that oftentimes pockets of great asset poverty exist right next to or very close to pockets of great wealth. And you see that in Jackson, Mississippi, where just central east Jackson City has the lowest median wealth of the state, whereas just to the other side of that border, there's high wealth there. And so I think that is one of the things that has been mirrored in many other places in the United States, and Mississippi is no exception to this. So with that, I'll turn it back to Jamia and hopefully have a few minutes for questions. Thanks.
Yes, thank you so much, Dr. Kent. And thank you for helping us get to the root of the barriers. So without further ado, I would like to bring up our very own Mr. Cassio Batiste to close our presentations out. Cassio is the Vice President of Programs at the Foundations for the Mid-South. Cassio will share how the foundation is using this kind of data to drive real investment in workforce development and to expand economic opportunity throughout the Delta. Cassio, welcome
Thank you,
back, and you
Jamia.
can take over.
Thank you so much.
You're
I'm glad to
welcome.
be back. I'm excited for this conversation. I just want to start out giving a mission for the Foundation for the Mid-South is to invest in people and strategies that build philanthropy and promote racial, social, and economic equity in Arkansas, Louisiana, and Mississippi. Our vision is to be a catalyst for transformation change, fostering thriving communities with the equitable access to education, health, economic prosperity, and quality of life. And one of our major economic goals is reducing unemployment. And so when we're looking at unemployment, investing when we're looking at unemployment, the foundation invests in economic opportunities that empower residents to achieve financial security and growth wealth by connecting them to thriving industries and innovation programs. Reducing unemployment rate is a major goal for FMS, like I previously mentioned, and we support programs that empower families to break the cycle of poverty, achieve economic security, and build lasting financial stability through workforce development. And I want to just kind of share some of the programs we're doing around workforce development. Part of that is we talked about different supporting underserved communities, and so for underserved communities that I think we really need to focus on, and we're going to change the landscape of the Delta is investing in disconnected youth, women, veterans, and formerly incarcerated individuals. This strengthens the workforce by tapping into utilized talent, reducing poverty and recidivism, and promoting inclusive economic growth. By removing barriers and providing pathways to employment, we not only empower individuals, but we also build more resilient, equitable communities and more competitive economy. Now, for that, to have our strategies and have to holistic approach to workforce development, there are certain strategies we must have. First, core programs are a point of entry. Outreach must be accomplished through various means. One of the things that Dr. Kent mentioned was that people don't know about the jobs. So we got to do a great job in making sure we promoting these programs, recruiting individuals, identifying support staff that can get the word out, and also identifying good community partners. Also, to ensure that training programs lead to recognized certification and credentials that enhance participants' employability, lead to a livable wage career. Even though we may want people to be trained, we got to make sure they're trained and they're able to get a job that are going to make sure that it increases their economic opportunities. FMS, we've identified the top 5 industry pathways that we're going to be working toward through the Mississippi WIA. And then also, we got to think about other opportunities. Part of the strategy is internships can be provided through partnerships and community organizations, medical centers. And then our last and most important part of that is employment. That's the ultimate goal, working closely to identify job opportunities. Now, by restructuring the workforce development program, we have the power to address the skill gaps. By enhancing skills and certification, we equip individuals with the tools needed to better employment opportunities. Create sustainable career pathways, offering clear pathways, including certifications, provide long-term solutions to workforce development. Community and employment partners, collaboration with other like-minded nonprofits, local businesses, and education institutions ensure that program meets both employer needs and the participants' goals. Support workforce equity. The program promotes equitable access to employment and career advancement, helping bridge the gaps in the Mississippi workforce. While we continue to support our mission, expanding knowledge and improving lives, I think with economic mobility and the work we're doing around workforce development, we'll accomplish that mission. Thank you, and I send it back to Jamil.
All right. Thank you so much, Mr. Casio. You guys, this has been a very informative webinar on today. And I just want for us to just hit a quick shift to, I have some questions for the panelists. And I also want to say, like, all of this information was very vital, very valuable for the Mississippi Delta, especially being from an underserved community. I know it all too well. So listeners, I hope that you have, taken away everything that they gave. It was just phenomenal. So again, you guys, thank you. And first up, I have a question for you, Mr. Norman. So we've seen the numbers, but how can we turn this data into action and build strong partnerships with other organizations and community?
Absolutely. I think there are a couple ways that we can understand this. And thanks to Anna and Kiydah for pointing out that there's opportunities to make changes right now in your own lifetime or for the lifetime of those around you, but then also an intergenerational one that lasts longer. I think the way we can use data, and something that we really leverage here as the Federal Reserve as a neutral convener, is to use that information to build consensus around a cause. What I mean by that is by understanding the issues in your community, by pairing that with your own lived experience and the data that you find from other research partners, can help build a strategy for effective solutions that not only impact one's lived experience, but gives you tangible results. So some ways that you can turn that into action is by leveraging resources, sharing those out with other stakeholders who may want to be able to apply for grants or build presentations and share with others. I think the other way that you can use that data is reach out to folks like us, stakeholders who collaborate. And if you have insights and data you've collected, let us fold that into the work that we're doing and cast that wide net for you. Our research, our resources are truly there to help be a megaphone, if you will. I was going to say a magnifying glass, but maybe both, right? We can look deeper into some of these issues on your behalf to help you serve your community and to help you build community-oriented solutions. The last way I'd say that you can use that data to turn into action is to understand that information for information's sake is a barrier in itself. We talked about education earlier and how that is an important part of your mobility. But we want to make sure we use this to go into communities who may not understand or know what's happening in the Delta. I heard maybe in one of my first visits to the Delta is that Delta problems require Delta solutions. And for us to extract information and not come back with the answer only magnifies the importance of that research need. So make sure that the information that you hear is not only leveraged for partnerships to raise awareness elsewhere, not only leveraged with research stakeholders like ourselves so that we can build broader insights, but also use that information to build community solutions. Find a way to solve those problems. And I think I want to add that tag onto there to make this not in the frame of, hey, here's great information. It's on you to figure it out. Mm-hmm. That partnership component is important. And when stakeholders understand in so many different ways the needs of a community, there's really not a debate about the issue. It's really about who wants to be there first to put their hands to the plow and start to build something together. So I do want to point out some ways that we do that as the Fed is through convening. We can connect smaller communities or stakeholders who may not know where to turn first. We can point you in the right direction of people like CEO, folks like Kiydah at Hope, who have resources, products, programs that while you're in the process of building a solution, they have some options for you. But you might need to go to that nexus like a Federal Reserve Bank or other nonprofits in your community to start to build that build those partnerships rather. So that would be my initial answer. Take that information and share it with others, but make sure that the folks you share it with stay invested, stay engaged, because the last thing we want to do is tell people to learn something and fix it on their own. That just won't work. These are deep-rooted issues that require everyone to be involved from beginning to end.
All right. Thank you so much, Mr. Jones. And you said something. You said, put your hands to the plow. That signifies that you're going to do the work, you guys. So you have to do the work. And that brings me to the question that I have for Mr. Kiydah Burt. So from your vantage point at Hope, being that you guys do boots on the ground work, what are some real strategies that communities are leading to close the racial gap? Racial wealth gap, I'm sorry.
I think it goes back to what I talked about today, is you want to find financial institutions that have products and services that are actually meeting your community where your community is. If we talk about the impact of slavery, the impact of things that we didn't get a chance to talk about per se, like redlining, gentrification, some of these like structural developments that are putting your community on the outside of all this economic and community development. Well, there are financial institutions like Hope that are trying to mitigate and disrupt those processes of exploitation and divestment. So the first thing, if you're a community member, you want to go find a community institution that's about the community. So whether it be a credit union like Hope or as an anchor institution like HBCU, right? You want to go find these institutions that are championing your needs and your resources, and you want to lean into that work. And so do organizing around those institutions that are actually catering to your needs. Then the other half of this, again, to your question on what are some of the community strategies that are driving access to wealth, is really a conversation to other financial institutions, right? So again, we're a credit union, but this is to other credit unions and to other banks and to other loan funds, is that we must create products that give communities the opportunity to get ahead. Norman talked about economic mobility. Well, what's the industry's role in facilitating mobility? Well, you have to design products that the community needs. You have to be willing to cater to their culture of financial services. Everybody doesn't want an app. I know that it's crazy to say out loud, but some people still want to go to a branch. Some people still want to talk to a real person. So we have to be able to cater to those needs of the communities who are often in areas where they only have one option. And if they don't have one option, they have no options. And whatever options that represents no might be predatory. We didn't get a chance to talk about predatory lenders. For example, in Mississippi, charging close to 700% on a small dollar loan. You don't want the community to be preyed upon by such predatory actors, because if they suffer, we all suffer. And now our state's GDP and our economic output suffers. So to answer your question, you want to find institutions that are serving the community, institutions like Hope, institutions like HBCUs, resources like the Federal Reserve, right? And you also, from a financial institution standpoint, you want to create the products that's going to meet the needs of the community. That's the in-house mortgage product that we have. That's a payday competitor loan we have it's called Borrow and Save. We're not charging 700% interest on a small dollar loan. So those are some of the examples of what could what's already going on, for example, with Hope, but what others could be doing to help bridge the gap from to economic mobility to wealth generation.
All right. Thank you so much, Mr. Burt. So, you guys, it seems like Hope has the answers. So, that would definitely point me back to the question that I have for Dr. Kent, which actually gets to the root of some things. So, when we talk about wealth gaps at in the region, what do you believe is the most misunderstood? What is most misunderstood? I'm sorry, by the general public.
So, stepping back for a minute, my background is actually in psychology. It's not in economics. And I bring that up because there was a really interesting study done where the researchers basically asked people, what amount of inequality do you think that there is in the US? And they said, like this much. What amount would be optimal? They said smaller. Um, and the reality was that they thought there was this much, but there's actually this much, right? And I'm sorry, my hands are blurred a little bit, but essentially it's much bigger than people think, right? And so I think that's part of the issue is that people don't actually know necessarily what wealth inequality actually is. They think that it's not as big as it is, and it's half of the population owning 1 to 3% of total wealth. That's wealth inequality. That is so hard to grasp, like put our minds around and really hold on to. It's hard to understand. It's hard to conceptualize. It's just mind blowing. So I think that's one of the things. The other myth I would say is this myth truly of the American dream. We have a lot of American ideals like meritocracy, pulling yourself up by your bootstraps, that places the onus, the responsibility on the individual. And that is a belief that is held across the income spectrum. It's not just high income, high wealth people thinking that. It's middle income, lower income people thinking that. What's wrong with me? Why can't I get an education and get out of this? Why can't I build myself out of this? Why can't I get the better job and build myself out of this? And the problem is that structural problems need structural solutions. They're not individual problems needing individual solutions. So I would say those are some of the issues that we're facing right now.
Okay, thank you so much. And that brings me to my last question for you, Mr. Casio. Looking at where we are today, what gives you hope? Like, what do you see that can make that can bring about real change? And just see that change is possible in the Mississippi Delta.
Thank you, Jamil, for that question. I think one, having these engaging discussions and opportunities to share information that people may not be able to get prior to them being in their situation, but also encouraged by growing recognition among funders, policymakers, and partners that equity must be at the center of every economic strategy. Um, but also, what really deepens hope, the deepest hope, is resilience of the people in the region, in the Mississippi Delta, despite generations of systematic disinvestment. They continue to rise, creating change, claiming power, and rewriting the possible. Um, there was a future economic mobility lives in the courage and in the courage of creativity of the Delta, of the people of the Delta. So those are some of the things that I think gives me hope, and that's some of the work that I'm working toward with the Foundation for the Mid South, and we're working to continue bringing these engaged discussions and this great information to the communities.
All right. So thank you all for today. Thank you to each one of you presenters and for answering the questions with authority and to the best of your ability and your knowledge. I appreciate you for allowing me to moderate the conversation. And yeah, I would like to just toss it back over to Casio to close us out.
Thank you all for spending the last hour with us. We are really excited about this work. We're going to continue this discussion on our website, on our social media platforms. We're going to have some additional questions that we didn't get to, that where the group is going to continue to answer. Also, if you have some questions, please, go on our social media, send those questions to us. But I want to end with one, thanking all of the organizations and panelists and presenters, Hope Credit Union and the Federal Reserve of the Bank of St. Louis. Also, another extended heartfelt thanks to the generous sponsors, W.K. Kellogg Foundation and the Mississippi Truth, Racial Healing, and Transformation Initiative. We thank you all. We look forward to seeing you all in our next webinar. Thank you and have a great day.